Have you ever wanted an indicator that clearly shows when the market is gaining or losing strength? And even better, combines the power of several classic oscillators all in one place? Then you need to check out this indicator, the MULTI OSCILLATOR ADAPTIVE KERNEL, an impressive tool created by Alpha Algos. Today, I'm going to show you how to use this indicator on TradingView to spot reversal moments, analyze trend strength, and even apply an extremely effective strategy. If this content helps you in any way, go ahead and leave a like, and let's get straight to the point. The first thing you're going to do is open TradingView, the platform we'll be using. I've chosen the Australian dollar to US dollar chart here. It works on any time frame, starting from 15 minutes. I'm using the 1 hour time frame. You're going to click on indicators and search for the term MULTI OSCILLATOR ADAPTIVE KERNEL. And it's exactly this one that appears. Just click on it, and that's it. It'll show up on your chart. How does this indicator work? The indicator combines signals from well-known oscillators like RSI, stochastic, MFI, and CCI, and smooths them out using a technique called adaptive kernel to reduce noise and highlight what really matters, the direction and strength of market momentum. It changes the color of the candles based on momentum. Teal means an uptrend. Magenta means a downtrend. In the lower panel, you'll see the fast line. This thinner line reacts immediately to changes. Above zero, it's bullish momentum. Below zero, it's bearish momentum. And you can also see the slow line, kind of like a histogram. It smooths out the signal and confirms the trend direction. When the market, here in this side table, goes above 40, it's overbought. And when it drops below minus 40, it's oversold. These zones help you identify points where the market might be too stretched and tends to revert to the mean. By clicking on the indicator settings, you can change the type of kernel, exponential, linear, or Gaussian, adjust the sensitivity, choose the active oscillators and their periods, enable or disable candle coloring, and much more. If you're a beginner, keep the default settings to start with. How to use it in practice? Trend and momentum analysis. When both lines are above zero and the candles are teal, we have a strong uptrend. When both are below zero and the candles are magenta, the market is in a downtrend. If the fast line is above the slow one, momentum is strong and the market is accelerating in that direction. If it starts to move inside the slow line, momentum is weakening and the trend might change soon. Now, how can we use this indicator in an easy and practical way? I'm going to add one more indicator. Go to Indicators again and search for 3 EMA. Select this second option by Victor Grego. It will appear on your chart. Go into the settings here and let's set the exponential moving averages to a period of 20 for the first EMA, 60 for the second, and 100 for the third EMA. And now, we have the perfect combo to only go with the trend. And when that trend starts to weaken, we can exit the move. Notice, in this case here, the market was in a downtrend, broke through all 3 EMAs, and came back to retest in the EMA region. When the market pulls away with a solid green candle, without leaving a wick on the upper side, we can consider that the market just wants to do this pullback retest to continue the upward movement. Along with that, we need to analyze the moving averages to see if they are all aligned upwards and separated, not touching each other. Also, we look at the MULTI OSCILLATOR indicator to see if the fast line of the indicator is pointing up and if our slow line is also indicating upward momentum. Both are showing upward momentum. The price is accelerating in the uptrend, which means we can make our entry on this candle here that just gave us the confirmation we needed. Set the stop a little below the moving averages, in this case here at minus 0.34, and our take profit twice as high, aiming for 0.68. The chart reached this point here, giving us a nice win in favor of the trend. Now notice in this case, on the sell side, we have the market breaking below the moving averages, then coming back to retest them in this pullback to the moving averages. At this point here, it clearly rejected the averages and our bearish momentum candle appeared. Notice that on our indicator as well. It went back to retest the zero zone and then accelerated downward again. In other words, showing us that there really is selling pressure picking up here and that this was just a pullback. So we could have placed our sell order right on this momentum candle. Since the three moving averages would make the stop loss too wide, we could set our stop just above this last high to have a slightly smaller stop loss. In this case, a 0.25% stop loss. So we would set our take profit at twice that risk, meaning 0.50, and the market actually went even further down here, giving us another win now in this bearish example. The multi-oscillator adaptive kernel is a visually powerful indicator. It brings together information from several oscillators to give you clear signals of trend, strength, and possible reversals through candle coloring. The fast line and the slow histogram help you get a complete read on what's happening in the market. And when we combine it with moving averages, we have a high probability of only following the trend after the pullback. But remember, this is not investment advice. Use this indicator as part of your analysis, along with support and resistance, price action, or other methods you already use. If this video helped you, give it a like down below and subscribe to the channel for more content like this. See you in the next videos, and happy trading!